Hi there, welcome to the channel. So today is Sunday, July 10th, and I want to take a look at the week ahead. Okay, so looking at the economic events that are coming up this week, there is some little one on Tuesday. I don't think it's anything. There's nothing on Monday, but really Wednesday is probably the big one. All right, so we're going to get the CPI. Now, this CPI is the epicenter of really everything that's going on. So it's probably going to be fairly important. And then on Thursday, we're getting some initial claims, jobless claims, and then PPI, and we'll get natural gas inventories. And then on Friday, we're going to get a bunch of import-export prices, retail sales. So we'll kind of see what happens and consumer sentiment. So going over, I don't know if the stuff on Friday is going to be that, moving. Import-export prices, that will just kind of that's going to help us kind of figure out maybe whether we're going to have negative GDP, because once again, that large imports are subtracted from GDP, et cetera. It was one of the components that really affected our negative GDP in the first quarter. So kind of interesting to see that. But then retail sales and stuff, they look like they're expecting positive. But we'll see if that holds up. We'll see if there is any, decline there. The thoughts are that, we're possibly in or going into recession. And so therefore, and thusly, kind of keep an eye on that to see if there's any sign of that. And then the other thing is University of Michigan consumer confidence. And we'll see what that comes out to be. It's at 49.4 is a consensus. That's interesting on that one. So that's what's coming up this week. So looking at CPI, CPI is right the big one, because we have the Fed who's been raising rates, and they've been really a little bit stalwart about, hey, we need to get this inflation down. Now, the last inflation report that we had didn't really come down too much. And so it actually kind of didn't really inflect down. It kind of persisted high. So this has been going on for a pretty long time. And so they've kind of had enough of it, I think. So that's why this is going to be actually a somewhat important CPI. All right, so one of the ones I've looked at before is this Cleveland Fed inflation now forecast. So if we look at this guy here, you can see that. So the way this works on these lines, I know it's hard to see, but the blue lines are the actual CPI. And so you have the CPI year over year, and then you have the Cleveland forecast. So these are the bars here. This is the overall CPI on the year over year basis. So you can see that this hasn't been far off. The actual CPI reported year over year tends to be a little bit higher than what they're estimating here. So looking now to the forecast, if we look at the forecast for the month coming up, you see right over here that it's actually, looking to go higher. So that's kind of interesting at all. So right now it's being in forecast to actually tick up a little bit, not a lot, but a little bit. And so if it actually follows through and ticks up a little bit, then that would certainly probably not be very positive for the market. However, some of the things that we could look at here is if we look at our oil. So energy, oil is one of the main things. If we look at what happened in the previous month, you could see that our oil, and I'm just taking USO as a proxy for the oil, and we can see that like at the start of the month for May, you had this situation where overall it went up 13.6% here. So during the previous month, you had it pretty much consistently moving up. Now, of course, it was volatile. So it went up, then it went down, but then it went up. So basically, if you broke it up in the way they break this up into periods, so like the first 10 days, something like that, the next 10 days, and then the final 10 days. And so if you looked at it, you could see that like, okay, well, maybe they were flat for the first period, depending how they averaged this out. But then the second period, they'd be up. And then the third period, they would have been up for that month. And then like what's happening this month? So the first period, the first 10 days would be like, okay, you kind of report up 7%. But then looking at the other two periods, it may very well be that you could be kind of net down or net flat. So I wonder, and so I'm just thinking outside, speculating. I just wonder because, inflation has been persistently high. It hasn't inflected down, except that we note that if we look at this, the actual core kind of has inflected down. If you look over here, core consumer price is the red line here. And so the red line and the green line. So the core is actually inflected. Okay, so it's kind of important to note that. Let me highlight this again. Down here, the solid lines, not the bars, you see the red and the green line. This is your core inflation has already inflected. So this has already started to go down. So we have the core is actually going down. Now, yes, it's showing a little bit of a tick up here in the expectations, but overall at this point, you see the core is kind of inflected down a little bit. So my point that I'm trying to get to is I don't know, but I just wondering if there's a possibility for a little bit better CPI number coming up here. And then if not, then we should, looking at July, as of this point, you have potentially a big drop off in the first period here. So we may be getting to that point. We may be getting to that point where energy is going to finally back off a little bit and give us some relief on the CPI data. So looking at the other charts, can see that the SPY is doing its stuff. I mean, we had a bunch of up days. Last week, we had a bunch of up days last week, but it's kind of getting up against resistance there. Volume kind of a little bit lower, but that's kind of what we see. I just wonder if like, and then really, and so what's happening, you can kind of see how you have like, you're right up against previous high here. And so the question is, do we have this potential possibility of it trying to, kind of peak out of this near-term resistance. Now, then there's going to be a huge bunch of resistance up here. And this resistance, is kind of coming from two places. You have the resistance from the previous lows over here that you broke below, but then you have this one and then you have this one. So there could be a lot of resistance up there, but it's kind of see if we break out of this little tiny resistance guy here. And given that it's just so oversold, so it's kind of interesting if we just have a little bit of calm in the market, if we just have a little bit of, maybe the inflation doesn't go as crazy as it was, then maybe we get a little bit of relief here. Now, the other thing too is, here's like ARC. And so we saw this on a couple of different charts. You kind of see how it kind of peaked out and broke out a little bit on like ARC. I think Tesla almost broke out. There's a couple other little stocks that were doing some of this kind of behavior where you have some kind of W forming and you're actually pushing or breaking out. Now, this was not a great breakout, not great volume, and it sold off half the day. So this is not like a wonderfully bullish thing. However, sometimes, couple things, it could just go back into the consolidation pattern. The other thing though is it could kind of be presaging that it's just going to take more time and work its way up. So we see this on the speculative end. So if we go like on the ARC, is the very speculative stuff is actually starting to push out above recent highs. So that kind of makes you wonder if we're getting set up for a little bear market bull rally. And so if I look at some other guys here, like Coinbase was hasn't made it, trying to break out of there, but not yet. CRISPR doing a little breakout here, but then kind of failing, but still kind of hanging outside there. This one, a little break above the recent. So all none of this is great, right? None of this is great, but you're seeing some stuff that's kind of, and also looking as well, the amount of time that you decline. Like if you look at this chart and say, okay, look at all this period of time that we go distance down, and then we have a little rally, flat, and then we spend a bunch of time down, then flat, and then we have a huge gap down, little rally, and you can kind of see it. But what you're seeing here is look at the frequency. So now it's getting into oscillating. And what you're doing is you're not really, yes, we put a new low here, but this isn't really, isn't like a super new low. Like over here, this low as compared to this low was significantly more. This one here, was almost the same, but comparing these lows to this low, it was much lower is the point I'm making. So as when we see a chart and we see a situation, so just we have a chart and we're in a downtrend and it's having issues and it's going down like this for a period of time, and then it makes a little run, and then it's going down for a long period of time. And now as you start to see these kind of, yeah, you're still putting lows, but as it's kind of compressing up like you see here, it's almost as if you're leading us to a possible potential base and kind of a turn. Now, it may very well be a very, very short-term turn because I mean, I don't know until the Fed's done, none of this means anything at this point, but it's just something to kind of think about. Because you're looking here and you're not really putting down really new lows. You're not putting down aggressive new lows in some of these, and some of these are actually trying to peak out above recent highs. So it's still early in that game. But yeah, like look at this one too, Teladoc. This one is one of these stocks that had gotten the crap kicked out of it. Yeah, that huge gap down on the on the impairment charge for goodwill, which, by the way, there's a bunch of goodwill still on their balance sheet that may need to continue to be written down. And I don't know how to play that one. I'm not an accountant, so I don't fully understand on the rules. I know that on a regular basis, which would be at least annually, they have to look at what the goodwill they're holding, et cetera, et cetera. But, once again, looking at this stock, you can see here right at 40. I mean, it broke out. So you had this little high here, broke above that, broke above this, and now it's going into the gap. In the next, there's another area here where maybe you have some big resistance, and the gap is resistance, but it's plugging its way into the gap. So you're seeing that, and so it'll be interesting to see on the speculative end. So how is this going to work out? How is this going to play out? I think we have more to go, and so maybe this will just be a consolidation period for some of these stocks. But at some point, they will just stop going down. And part of the reason, even though the earnings may actually get worse, and maybe the reason for that is like, look, if you're shorting it and you're solding it, like a lot of the fundamental people, like taking Zoom, whoever owned it at the equivalent of $400, like, okay, really, are you still holding it down at 90? Or did you finally give up and just say, hey, we've had enough, just get out of it or get out of most of the position? Because you got such a loss there. That's such a huge loss. I mean, you have to throw all that stuff out. All the fundamental stuff, you kind of have to throw it out. When you're dealing with losses like that, there's very little, if anything, that you can do about it. And so at some point, everyone that wanted to sell has sold. And then you have a phase where the people that are short need to cover, right? Because they're like, okay, I milked it for most of it. And it's a losing proposition to go that extra step. You have those big, there's all these guys, not Bridgewater, some of these other guys, and they'll have these, and they make these investor presentations about how this company's going to go to zero or that company's going to go to zero. Some of the famous ones are, I can't think of any right now, but you have these companies out there, these short sellers. And what they do is they kind of, some of these try to like bet the whole thing that, the company goes to zero. Well, the problem is, you can make significant amount of money at a company going down. As you look here, equivalent 400 down to 100, it's like, that's a good return. So I don't think most of the players are like that. Most of them are going to be like, look, I got an 80, 75% profit and 90% profit. I'm taking my money and getting out and go and find something else to do, and it doesn't mean that they come back in and say, oh, now I want to buy this. That's not what it means. But at some point they have to take their money out because, and making that bet that the company actually goes bankrupt is very often a losing proposition. There's really like, okay, is Zoom going to go bankrupt? I haven't done their financials, so I have no idea to even speculate on it, but it may very well, probably not, probably not. Is Tesla going to go bankrupt? Probably not. I mean, they've had some positive cash flow. I think they're going to have some trouble. They're going to have to write off some Bitcoin coming up. And, if apparently some of their gigafactories are furnaces for burning money, as someone said, was it Musk said that, they could have some issues there. they definitely could have some issues, but are they in a position where they can make themselves stable, even though, with the car sale drop that's coming, they're going to have issues, probably be around. And so at some point, uh, basically bulls make money, bears make money, pigs get slaughtered, that kind of a thing. You just, if you're greedy on either side of it, if you're greedy on either side of it, you lose money. Look, you're riding Tesla and you're like, oh, I bought it in this base somewhere, or you bought it anywhere. And you're like, oh, it's $800. Or if you were like, got in later and you're like, oh, I bought it at, in this whole area here, I bought it like 600 and it doubles to 1200 in a matter of 4 months. I mean, okay, you're just being greedy if you're not taking a little bit off. I get the part where you want to like hold something long term and stuff. Yeah, sure. But you should be and this is not financial advice, but I think that the problem is you can't predict the future and you can't predict all these things. So if you got a bird in the hand, it always seems worthwhile to, especially when you have moves like this, to take some of it off, just take some of that and put it in your pocket. And, that's how it works when you're in Vegas, right? Like the smartest thing to do is like, oh, well, I won a bunch of hands, well, it's going to turn on you. You're not the MIT card counting team. So it's just going to turn on you. You're going to lose in the dice. If you're playing the dice, which that's the game I like to play, it's like, oh, those dice are going to turn on you. You're going to go from a situation where, they get the sevens are always on the come out rolls and everyone gets money. And then you get some people just rolling points. Wow. They just keep rolling point after point after point. And or not even point after point, they just keep rolling all the numbers except 7 and everyone's making money. And but at some point the table will change. Statistically, we know the table is going to change, and it's going to go from that where it's like, oh geez, every time you're on the come out roll, you get a craps here and there. You finally get a point, you roll a couple other numbers that aren't the point, and then you get 7 out, and it just does that for the next hour. You lose all your money. So the point being is like, there's the practical aspect of taking something off the table, because we don't know. We all can't know. And so if you were in a situation, boom, you doubled your money in 6 months, to take some off and just put it in cash. I mean, it doesn't matter. You're losing 5% a year, like you're losing 8% purchasing power a year on cash compared to losing 1,200 to 6. You're losing 50% on it, the value going down. That's another way to keep sort of think about it. Well, I think that's it for this one. Once again, just yip yapping a lot, but the CPI is the one to watch for. That's going to be the key element of it, and it's going to be, what does this mean for the Fed, and what the speculation of what the Fed's going to do? Are they going to pivot in any way? They're going to get more aggressive, less aggressive, yada, yada, yada.